This video will help you understand different kind of orders and how to place them correctly on any platform you're using. In this video, I will be using the order windows which are for Trade Tiger platform, but the same logic will be applicable across any platform you're using. So let's start with the four different basic kind of orders. The very first kind of an order is called as a market order. A market order basically means that we are buying or selling at whatever the current market price is. The second kind of order is called as a limit order. As a limit order, we are defining the price at which we want to buy or at which we want to sell, which means whenever you're placing a limit order, the system will give you your price or a better price. In case of buying, you will get your price or a cheaper price, and in case of selling, you will get your price or an expensive price to sell. The third kind of an order is called as a stop order. Now, different platforms will be using different terminologies. That is the reason I have written stop/trigger. In some platform, these orders will be by the name of stop orders, and in some platforms, these orders will be by the name of trigger orders. A stop or trigger market order basically means that this will be a conditional order, and once that condition is satisfied, the system will buy for you at whatever the market price is or will sell for you at whatever the market price is, which means whenever we are placing a trigger market order, we are buying or selling at current market price after the user defined condition has been satisfied. And the fourth kind of order is basically called as your stop or trigger limit order, which means whenever the user defined condition is satisfied, we will be buying and selling, but this time we are buying and selling by defining a price, which makes it as a stop or a trigger limit order. Now, this is the logic which you have to remember irrespective what kind of order you're placing, whether you are going long, whether you're going short, whether you're placing an order for your stop loss or you're placing your order for your targets. If you'll remember this logic, you will never make a mistake while placing the orders. So let's assume that this is your price chart and this is where your current market price is. Now, all you have to remember is whatever you do in real life, right, goes to the price column in your order window, and whatever you don't do in real life situations goes to your trigger column or your stop column in your order window. As an example, whenever we want to buy, right, we would love to buy cheaper than the current market price. So whenever you're placing a buy order, which is to buy at a price which is cheaper than the current market price, we will be using the price column, right? Because that is what we love to do in real life. In real life, we would love to buy at cheaper prices. But if you're placing an order to buy and you're placing an order to buy at a price which is expensive than the current market price, that is the time you will be using your stop or your trigger column. Similarly, when you're placing an order to sell, in real life, we would love to sell expensive than the current market price. So whenever you have an order which is to sell at a price which is expensive than the current market price, and that is what we love to do in real life situations, we will be using the price column. And whenever we are placing an order to sell at a price which is cheaper than the current market price, we will be using the stop or the trigger column. Now, following this logic, let us understand how to place different kind of orders. We'll start with the very first one, which is a market order. Let's assume that this is an area on the chart where you would like to be a buyer. You want to buy at a range which is between 96 and 100 rupees. We will wait for prices to come back to our range. As a market order, all you have to do is bring up your buy order window, put in your script name, add in your quantity. Disclose quantity column is to hide your quantity. The maximum you can hide is 90%, right? But we will be putting it as 0, which means we are not hiding any quantity as of now. And as a market order, Sharekhan accepts 0 as the price, and you can see below the price column it says 0 stands for market price. So whenever you want to buy whatever the current market price is, you will be putting 0 in the price column and 0 in the trigger column, and you will simply be placing the order. As soon as you place this order, the system will buy 10 shares for you of ABC company, and this is how you place a market order. Similarly, if you want to sell at market price, let's assume this is an area where you wanted to sell. We will wait for prices to go back to your sell range, and when the prices are in your sell range, we'll bring up a sell order window. We'll give the name of the script, we will give our quantity, and disclose quantity will be 0. Price will be 0, which stands for market price, and trigger will be 0. You have to remember that because we are selling means we are going short. Since we are going short and we don't have the shares with us, On Trade Tiger platform, you'll have to check mark SAM, which stands for Sell Against Margin, which lets your broker know that you are borrowing shares from him to go short in the market, and the order will be accepted. Let's move on to limit orders now. Let's assume this is the same range where again you want to be a buyer, and this time we don't want to buy at the market price. We want to place our order, which is as soon as prices they come to 100, I want to be a buyer on this script. So what I'll be doing is I will be bringing up a buy order window. I'll put the name of the script. I will give my quantity 10. My disclosed quantity will be 0 because I don't want to hide any quantity. And the next step is to understand where to put the price, whether it should go in your price column or it should go in your trigger column. For this, we'll follow the same logic. Let's assume this is my current market price, which is 105, and now I'm placing a buy order to buy at 100, which means I am buying cheaper than the current market price because my current market price is 105, and this is what we love to do in real life, and whatever we do in real life goes to our price column. That is the reason 100 will go in your price column and trigger will be 0 and you'll be placing the order. Now as soon as prices they come to 100, the system will buy 10 shares for you, and that is how you place a buy limit order. To place a sell limit order, let's assume this is the area where we would like to sell at a price which is 200. We will be waiting for prices to come back, and we want to sell as soon as prices they go to 200. Again, we'll bring up our sell order window. We'll give the name of the script, which is ABC. Quantity is 10. Disclosed quantity will be 0. We'll again follow the same logic, and that logic is we will try to understand that from the current market price, are we placing an order to sell at an expensive price or at a cheaper price? In this case, I'm placing an order to sell at an expensive price, and that is what we love to do in real life, which means we again have to use the price column. So 200 will go in my price column, trigger will be 0. And because I'm going short, which means I'll have to borrow shares from my broker to go short, I'll have to check mark sell against margin, and I'll be placing the order. As soon as prices they come to 200, the system will sell for you and you will be having a short position. The next kind of order is a buy stop market order. These kind of orders can be used for your breakouts, or these kind of orders can be used when you want to take your entry after some confirmation. So let's assume this is an area where again I want to be a buyer, but now I want to be a buyer after I have some confirmation from the chart, which can be some candlestick patterns, which can be your indicators, which can be your oscillators. So let's assume we are waiting for prices to come back, and now we have this candle which is giving us a confirmation that yes, I can be a buyer now. When the prices are inside my zone, I can buy two ways. One is I can immediately buy at the market price, and the second one is I can wait for that breakout to happen and then be a buyer. Placing an order as a market order is something which we have already learned. Let us understand how to buy as a breakout trader. Because I want to buy at 100 and the current market price is 98, we'll follow the same logic that from the current market price, I am placing a buy order to buy at an expensive price. And whenever we buy at an expensive price, we will be using the stop or the trigger column. That is the reason 100 will go in my stop or trigger column. Placing it in price column is absolutely incorrect. So we'll put it in the trigger column. And now this is the condition, which means as soon as prices they go 100 or above, I want to be a buyer. But we also have to define at what price I want to be a buyer. As a market order, I can place this as 0, which means as soon as we have a breakout of 100, whatever the current market price is, the system will buy for me. This order will be accepted by the system, but there is a downside. And that downside is in case prices they move up really fast, or in case they gap up, you will be getting a very bad price. That is the reason whenever you're taking a breakout trade, it is always better to use a limit order instead of using a market order. That is the reason for breakouts we'll never use market orders, we'll always be using limit orders, and that is what we'll be learning next. So let's see how do we place it as a buy stop limit order. My prices are inside the zone again. I have my confirmation, and now I want to be a breakout trader. I'll bring up my buy order window. I will give my script name, which is ABC. I'll put in my quantity, which is 10. Disclosed quantity will be 0. Because from the current market price, I'm placing a buy order to buy at an expensive price. My price, which is 100, will go to my trigger column. and now I want to buy when the prices are leaving this breakout area and I don't want to have a lot of slippage. That is the reason I'll add a value here, which is the maximum slippage I'm comfortable with. So let's assume I'm comfortable with having a slippage of 10 paise. I'll give my price as 100.10, which means when prices are leaving the zone, you will be buying at 100.10 or a cheaper price, otherwise the computer will not buy for you. In case prices the gap up or they leave really fast, this order will still be a pending order and you will not be getting worse price. Similarly, in case of your sell stop limit order, which means now I want to be a breakout trader when this level is getting broken, I'll wait for prices to go inside the zone. Let's assume I have my confirmation. This is the time I'll be placing my sell order to sell ABC script. Quantity is 10, disclosed quantity is 0. Will again follow the same logic that from my current market price, which is 203, I'm placing a sell order to sell at a cheaper price. So if you're selling at a cheaper price, we will be putting the price in the trigger column and not in the price column. Therefore your 200 will be in the trigger column, and because we don't want slippage, we will again be reducing the price maybe by 10 paise and giving that value in the price column. And because we are going short, we don't have shares with us, we will check mark sell against margin and this order will be accepted. So now we have learned 3 different ways to buy or sell. One is your market order, the second one was your limit order, and the third one is your breakout entries, in which you're waiting for some confirmations and then buying and selling at your breakouts. Now we are already taking a position in the market. We also have to learn how to protect ourselves by putting a stop loss. So let us assume we already have this buy order to buy at 100 rupees when the prices are coming back. So as soon as prices are in your area, the computer will buy for you. But the problem is, in case prices they keep going lower and lower, you will be losing money in the market, which is when I want to place a stop loss at 96. Because I am buying to enter the trade, I'll have to sell to exit that trade. So to place this stop loss order, I'll bring up a sell order window and we'll follow the same logic. My current market price is 98. I am placing an order to sell at a cheaper price. And whenever we sell at a cheaper price, we don't use the price column, we will be using the trigger column. Therefore 96 will go in my trigger column, and as a rule your stop loss should always be a market order. The reason for that is, in case you're trying to control your slippage on your stop loss, what might happen is prices might gap down 10 paise, 20 paise, and because you were controlling slippage, now they are going against you, and instead of losing 20 paise, you're losing another 2 rupees or 3 rupees. So we are happy giving that extra slippage, but as an emergency exit, it should always be a market order. Let's understand the same thing for your short trade. In case you are taking a short at 200 and now you want to place your stop loss at 206 to protect yourself, because we are selling to go short, we'll have to buy to close our position. So we will follow the same logic. From the current market price, I am placing an order to buy at an expensive price, and in real life we never do that. Something which we don't do in real life goes to our stop or your trigger column. I'll bring up a buy order window. The name of the script is ABC, quantity is 10, disclosed quantity will be 0, and because we are buying at an expensive price, the price will go in your trigger column, and like I said, as a rule your stop loss is always a market order, therefore your price column will be 0. So now we have learned how to place your entry order in 3 different ways and also how to place your stop loss. The next thing is to have your target order in the system. Your target order is very easy. It is as simple as placing a limit order. Let's take your first example. Prices are in the zone. I've already taken my long position. I've already placed my stop loss, which we just learned few slides back. And now I want to place my target. Let's assume my target is 107. Again, following the same logic, right? I am selling and I am selling expensive than the current market price, because your current market price is 98. Because I'm placing an order to sell expensive, and in real life we love to sell expensive, that is the reason we'll use the price column. I'll place an order for ABC script. 10 is my quantity, disclosed quantity will be 0. Because we are selling at an expensive price, 107 will go to your price column and trigger will be 0. Similarly, in case of a short position, because I'm already short, to close my position at my target, I'll have to buy. and this time from the current market price we are buying at a cheaper price. And whenever we buy at a cheaper price, that is something we love to do in real life, we will use the price column. We'll give the script name as ABC, quantity as 10. Because we are buying cheap, price will go in the price column and trigger will be 0. And that is how you place your target orders. All you have to do is whenever you're placing your order, just follow this logic. If you're buying cheap, it's price. If you are buying expensive, it is stop or trigger column. Similarly, if you're selling expensive, it will be price column, and if you're selling cheap, it will be stop or trigger column. And when I say expensive or cheap, it is always compared to your current market price. If you'll follow this logic, you'll never make a mistake while placing the order, be that any platform, be that any asset you're trading.